All right, well, let's move ahead and discuss a lot of the active stocks today. The stocks in focus with Amnish Aggarwal, Director Institutional Research at PL Capital. Amnish, good to have you on. I want to start first with Dixon Tech, actually. Small development. Promoters have sold a little bit of stake, I think about 2.5%. I checked the overall promoter shareholding. It's just a little over 32%. So they've sold a small part of it. Could be for any personal use as well. Your thoughts on the stock?
You see, I think these days you have promoters selling any stock shouldn't be taken negatively because markets have come up quite significantly, and we have seen a lot of promoters, private equity guys, they are trying to, you can say, in cash. Now, as far as the company is concerned, I think fundamentally it is in a very sweet spot. It is doing well. The growth outlook also of Dixon looks pretty decent. So I won't be able to give you any target and all, but I think in the overall space where it operates in, it continues to be one of the good stocks to bet on.
Okay, all right. Hi, Amnish. Good to see you. When crude oil prices have cooled off, so OMCs are going to be in focus. What's your take? What is the current view you'll have on OMCs, and do you think that it's presenting a good buying opportunity?
Yeah, you see, the main thing is that now crude is very volatile. In a day, it has crashed by nearly, say, 9-10%. Now, if the crude prices remain anywhere within the band of, say, less than 70 or, say, maybe up to 60 to 70 band, I think that is very favorable for OMCs because their profitability, working capital, all the things get a boost. And conversely, it is to some extent negative for the companies like your ONGC, your Oil India, etc. So to that extent, I think there could be some sort of trading uptick in oil marketing companies today. However, in the longer term, I think these are very, very volatile companies. One will have to wait and see where actually the crude oil stabilizes. But based on the current day's move where the oil prices have crashed, I think it remains to be quite a likely to be quite a good day for oil marketing companies.
Okay, oil marketing companies, got that. By the way, I'm just looking at a note that CLSA has put out on Nykaa. They've initiated coverage with an outperform rating. Target is 229. We'll just get the Nykaa stock up for you. Did well in trade yesterday as well. Yeah, it was up 3.5%. 203 is where it is, and CLSA feels it can get to 229. They're talking about the rapid growth in the beauty market. And they see as the underperformance phase for Nykaa perhaps ending. That's a CLSA view. Amnish, the reason I picked this particular note out was because there's a lot of interest in consumer stocks again in the market. How to play the rise in discretionary spends, the fact that there's an income tax cut, etc. So suddenly everyone's talking consumer. I don't know if you like Nykaa, if not this. Give us some thoughts here.
Look at in various baskets, even when we were talking about that there is some slowdown in consumption, the discretionary consumption was doing that. So there are absolutely, you can say, no doubts about that. So for example, you look at travel, you look at your aviation, some segments in discretionary, particularly on the premium side, they were all doing well because the middle and upper middle class, they continue to do well even during that phase. Now, coming back to, you can say, the benefit of tax cuts, yes, it will be there. Now, there could be a very wide basket of products which it could impact. It could impact real estate. It could impact, say, your auto, particularly, I would say, two-wheelers. It could impact some discretionary spending in apparel. It could impact something like your, for example, beauty products. So it could be far and wide impact of that. However, having said that, the problem in the industry today, in addition to, you can say, little bit of growth, is the competitive intensity. Because a lot of, due to these platforms, a lot of these companies today, they are going through an hyper-competitive phase. So that is why I think it has to be a very, very stock-specific call. And even if the consumption demand scenario doesn't look bad, one should not expect any big bubble to happen in such stocks. You will make money, but one should expect maybe you can say double-digit 10-12% kind of a return, and not something like 25-30 one should expect from these.
We're still in conversation with Amnish Aggarwal. Amnish, I wanted to ask you about VIP. The various reports that are indicating that there could possibly be a deal where PE firms take over from Mr. Piramal. I think as a house, you all were reasonably optimistic on prospects, and I think you all were one of the lone voices that was optimistic on the prospects. What's your view? A stock that was sub 300 rupees is closer to 430 rupees right now. All the good news in the price, even if there is a deal?
Okay, actually, one has to look at that the VIP stock corrected from 650, 700 rupees because the company was not doing well. There was too much inventory in the system, which I think over the past 5-6 quarters, they have not brought it down to very reasonable levels. So that is one part of it. And operationally also, inventory went down, warehousing cost went down, and the things should start improving. Now, the second aspect is that the travel is doing well. This time around, 1Q, we have got 1Q and 2Q good marriage season in comparison to what it was not. So to that extent, I think fundamentally it might be closer to the, you can say, bottom. At around, say, sub 300 rupees, the stock had actually declined a bit too much, and it was always in the news that there could be some change in the management, some PE player, or some other domestic player might come in. So I think if you look at the acquisition, you can say possibility, then there might be still some room left in this stock because the fundamentally things have bottomed out. And usually when the acquisitions happen, because the stock has actually come up by around 15% from the bottom, I think you can see that there could be still some juice, but whether it will be the kind we have seen in the last 2-3 months, kind of that or lower, that is something which we'll have to wait and watch.
Amnish, one is, of course, Z. I don't know if you have a view, was up 10% yesterday, was limit up. And the other is these smaller defense stocks had a field day yesterday. I mean, they've had a field day for a while. Garden Reach, Paras, Zentech, Idea Ford, some of them were up 10% a piece. Any thoughts?
See, as far as Z is concerned, as we talked last week also, that the promoter stake in Z is very low and now they are intending to increase the stake. Now, I think in the latest, you can say the investor communication, which they have indicated is that the losses of Z5 will come down significantly from plus 500 crores. So I think that is very meaningful because for a company like Z, so that effectively means that 2 to 3 rupees addition to EPS straight away if they are able to eliminate those losses. But how will they do it remains to be a very challenging and difficult task because today, I think we are gradually and slowly moving towards, you can say, OTT world. And OTT, you have got, you can say, Jio Hotstar is there, then you are having Netflix is there, Prime Video is there. The competition there is intense. And I think Z is very strong as far as your broadcasting is concerned, but you have to be equally strong in OTT if you want to have a very long-term view, say 5 years, 7 years down the line, where majority of consumption of the content might shift on the OTT platform. So I think because the stock had been butchered, it was lying low. I think it is bouncing back. Now, to what extent it will go, we will have to wait and watch, depending upon, you can say, how the things play out for this particular name. And regarding the defense stock, I think defense as an industry is coming up. You can say, when the demand for the larger defense equipment goes up, then all the ancillary suppliers will also gain to that extent. So I think going by what is happening around the globe, in terms of wars, in terms of repositioning, I think defense stocks will continue to be in the limelight for some more time.
Look at the rupee open, 86.11 compared to 86.75. So that's a big move, rupee strengthening against the dollar this morning as the dollar itself takes a bit of a dive lower. Nothing large, but of course, I mean, here, I think the rupee is especially sensitive because we are such a big oil importer. I mean, the worst case was that there's some disruption with regards to that. So that has not come through, that's not happened. And I think you're seeing a bit of a relief move as far as the rupee against the dollar is concerned. A full 65 paise move on the dollar rupee this morning.
That's the rupee, but the equity market pre-open, at least from what we have right now, it's only 1-2 minutes. It's up, but it's not the big surge that the implied open was indicating. The implied open was indicating almost 300 points higher. Right now, the Nifty seems to be a little more measured, just about a 0.5% increase coming through. Some of the oil marketing companies that Nigel was pointing out, they're doing really well in the pre-open session, 4 to 5% up on many of these stocks like IOC, BPCL and HPCL. Amnish, thanks very much for all your thoughts and the context this morning. You have a good day.